Yo, yo, yo. Welcome back to the channel. Today's video, we're going to go over some of the higher time frames and take a look at the year for AMC and what it means in the grander context of the stock, where we stand from a longer time frame, and we'll briefly cover some of the shorter term thesis that we talked about in yesterday's video. Big goal for this video, I really want to see some of the engagement come back. We've had lower engagement on the most recent videos, but it's probably just because I haven't been bringing it up as much. So if you didn't know, if you're new to the channel, the best way to support the channel is to watch the videos all the way until the end. 1, like, 2, and then comment, the third thing. As well, share it with anybody who you think would gain anything from the video. If you like the content, that's the best way to support. If you don't like the content, that's totally fine as well. You can dislike if they still have a dislike button. I've noticed that sometimes they don't have a dislike button. So feel free to do that if that's what you want to do as well. But without any more of that shilling, let's get into it. So looking at the monthly chart, and we'll look at, really, let's start with the higher time frame, okay? I wanted to go and create a 12-month chart, right? So this is, each candle represents a year. As you can see here, what you have is a pretty good big reversal here in the grander context for the stock, right? Let's put this on log scale. And we're going to use fib on log and not on log as well. But you can see here that before this year, this thing cleared out all of the extensions on the Fibonacci. But closed, right? You got to close above the 4.272 extension at $2.11. And then the next monthly close started out above the 4.236 until you found, and I'm measuring this from the bottom of January 2013 up to its previous top, which was on January 2nd, 2015 at $36.50 about. So, well, it says $36.30. So, that is the first thing, right? So this was pretty much, I mean, obviously make or break, right? The stock went all the way down to $1.92 from its all-time open. Like its all-time open was around $20. So it was definitely on its last leg. Obviously, everybody knows that. The COVID collapse, everything like that contributed to all of this. So where do we stand from here? Well, what you have here is a giant bullish engulfing candle. That's just the reality of it. It engulfed the previous 3 years of trading and closed just below the all-time high open. I'm sorry, the open of the all-time high, which was $34.40. All-time high close was $33.88 back in 2016. All right. So that's the 12-month. Now, what I noticed was something really interesting on the 6-month. Okay, the 6-month chart, to me, is really interesting because when you look at it from this perspective, you really get a better idea of what we've done so far in this retracement. And again, obviously, you have this giant bullish engulfing candle that spanned from January to the end of June of 2021. And then you have this retracement the following 6 months. Now, if you measure using Fibonacci retracement, you are just below the 236 on log scale. But I've already shown how not using log scale on a log chart is still a relevant way to use Fibonacci. And you can see here that if you don't use log scale on Fibonacci, this monthly close and the way that the 6-month close, where we close to end the year here, has us sitting right in the all-time golden pocket. If you measure from the bottom of the year, $1.77, which is the all-time bottom, all the way to the top, $72.44. Bulls, okay? This is a bullish effort, okay? And best believe that bears, okay, bearish institutions were looking at this. They look at these longer time frames that retail doesn't look at, and they did not want to lose this. I can guarantee it that they did not want to lose this. Let's see if it shows the same way on linear scale. Yeah. So on linear scale, you get the same thing, right? So 6-month chart, this is a a good retracement. This is a healthy retracement on the 6-month chart. You slip down in below the 707. Everybody knows AMC loves its 786s, right? But then you hold on to this 6.5, which is right within the golden pocket, which is incredible to me. When I saw this, I was like, wow, like obviously this is a painful retrace for retail, right? But in reality, it's healthy. This is a healthy retracement on the 6-month chart, in my opinion. Does that mean that we moon tomorrow or when the market opens back up? No, I'm not saying that on Monday. But what I am saying is that in the grand scheme of things, on the larger scale, in the longer time frames, this is a meaningful close. Trust me. Bullish institutions are excited about this. 3-month. Same thing. I mean, you know, obviously you get the same close because the Fibonacci isn't changing because you're measuring the all time. So let's do something different with it. Let's see if we measure from the top here on October 2020, down all the way to the all-time bottom. Yeah, see, I might have to put this on log scale to get anything relevant. Because it's such a big. So here, if you do this in an extension matter, so when you flip the retracement over, you get extensions, and you can see here the 3618, right, kind of called the top. Really, the 3.414 called the top of the close for this candle, and then you got rejected off of it. You can see here that you found support on the 2.414 Fibonacci extension at $20.56, which obviously is the key top for the and guarantee you that this played a role in the rejection at this level, even though everybody's going to say, obviously everybody's going to say, is the buy button collapse, but the buy button collapse in a lot of ways was very technical. So that's definitely something to look for. Let's what was I just about to do? Oh yeah, I was going to let's see if I can get this on a higher time frame. Let's do like the 8-hour. Well, it's a lower time frame, but a higher hourly time frame, and then do extended, because remember we did have the higher number in pre-market. You can see here the 2.618, $25.15 acted as a level of resistance in that pre-market right before the buy button was taken away. You found support here at the 100 level. Wow, that's interesting. So where you ended up finding the support was at that 100% mark from the higher time frame. I know that it doesn't look as clear here. Let me show you again how we measured it. Oh snap! It was on the 6-month, wasn't it? Yeah. Wait, where did I measure it from? Oh snap! I don't remember. What I did. Is it here? I mean, this kind of looks good. If you use this candle from October 1st, 2020, damn, I'm so stupid. How did I mess that up? Somebody in the comments is roasting me right now. You can see here. Yeah, I mean, you can see. You measure from, oh, that's what it was. It was the top of this little wick right here. The October wick. Boom. There you go. Was this it? I feel so stupid. Somebody in the comments tell me what I did wrong. You're going to have the benefit of being able to rewind time. See, I'm recording this live, so I can't rewind time. Just edit your videos, Dave. It'll make it all so simple. So then what do we have on the monthly, right? To me, this monthly candle to me looks like a bullish hammer. Okay? This is a reversal candle to me. That's what I see here. I see a hammer. I see bears losing strength, right? You can see the volume. I mean, look, and we can go to the RSI as well. I'm sure the RSI will tell a similar story. Not really on the monthly. I guess you're just really cooling off, right? Where was the what are we touching here? Are we touching any relevant levels? Let me take this moving average off of here. Yeah, I mean, this was kind of the ceiling that was broken that we're coming back to retest. It was like broken before the run up in June. You have cooled off the monthly RSI a ton. I love that. You're down here at $53. And to be honest with you, you never got I mean, this is obviously overheated, okay? Like don't get me wrong, but you never got super overheated on RSI. Whenever you go to higher time frames and you see that 95, I'm sure that you'll see it on the week. Let's see. No, the weekly you only got to 90. Wow. Let's go to daily, maybe. Yeah, this is where you see that overheating. Once you get to this 95 level on RSI, it's very unsustainable. Once RSI gets to 95, you really have to be and I know that AMC, everybody talks about short squeezes and how it's different. It can't be measured technically. 95 on RSI is a good, historically for me. Like if you look at the big rallies in the history of the world or whatever, the big price rallies, the bubbles, 95 is a very big turnaround point, and usually shoots price down pretty aggressively. And I'm not saying that it can't go back, right? I actually believe that it will go back to these higher levels on RSI, but this is a good point of reference that you're losing the volume to support your move. And you're just not gonna have the aggression, right? Like the buying aggression is just wearing out. If the buying just kept happening, then the RSI would remain relatively cool as the price was climbing up, but that wasn't the case, right? So that's and it's not financial advice or anything. It's just something that I look for personally, to have better expectations as to when you might see a turnaround, right? And look at how, I mean, Fibonacci is such an interesting thing to me. If you measure, right, we're measuring from the top here in September to the bottom here in January before the run up. If you measure there, and I'm going to make sure it's perfect, you can see that throughout, right, you ducked underneath this 786 level right here for the buy button collapse. Boom, you can see it bouncing around. This is the daily chart. You can see it bouncing around at these key Fibonacci's, right? You get rejected off of it. You come up, you get rejected here. Rejection, 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 support, rejection, support. You get sent up. The price, even in this big run up, is coming back to test these levels along the way. And then even here, right? You get sent down, you find it as support. Rejection at the 2.414. Support at the 2.272. You traded above here at the 2.414 before you were ultimately rejected. You tried to find support at the 2.272. Boom, you come down. Look at this, $31.37. Beautiful. I mean, this candle right here, this daily candle. Oh, this daily candle literally bounces right off. Right here. There it was. July 19th literally bounces right off of this 200% Fibonacci level. Boom, you bounce off of that. You bounce off of the 2.272 to the upside. And this 45, oh my goodness, look at the story behind this Fibonacci, man. This is incredible stuff. I'm such a nerd when it comes to this. You found support at your 200%. You send yourself up, you get rejected here, find support at the 200%. You get rejected at the 2.272, rejected at the 2.72. You break it, you turn around, right? And then once you broke below here, it was like, oh yeah, we got to go lower, right? You just didn't have the support. It sent the price down. Boom, you're coming up to the 2.72, 2.272, rejection. Look at this rejection. Remember, this Fibonacci that I drew is from the previous year. And look at the perfection in this. I mean, it's pennies off. Just incredible stuff, man. Like Fibonacci, such a real thing. You get sent off of there, and obviously these are also Fibonacci levels that are within here. This is just this is a very, very macro Fibonacci, right? You come down, boom, you try and send yourself up through this 200% again, you get rejected. You come back up, you get rejected again, right? And this is where we are now, right? So let's look at the thesis that we talked about yesterday. And yesterday, I told you guys that my bias was that we were going to get sent up or down relatively quick and then level out throughout the day until we found our max pain. I speculated that max pain would end up at it could end up at like $28. It did end up at $28 on Friday. It was at $29 yesterday when we made our video. We didn't end up coming back and finding max pain, right? So obviously price got sent down pretty aggressively here. Okay, this is a pretty major sell-off, right? I mean, just straight every hourly candle for the past how long? Every single hourly candle for the past 10 hours of regular trading has been red, right? But the good news is, using Fibonacci again, you can see that we're sitting right here below the local 786. So this is, especially for AMC, still a relatively normal retracement, okay? AMC loves these 786s. I say that all the time. And then if we measure it differently, I'm sure that you're finding a bounce at another in another range. But I'm not gonna fool with it for now. But you're still in you haven't even touched your 885 yet. You're still in your relative Fibonacci retracement level, right? And let's see where we bounced at. Is this a key support? Yes, right? $27.11. You can see here that every time that the price comes here, it tends to come back up in its recent trading. Here, it was a big rejection point. Look at this. Right? You sunk under here, right? I believe that if you looked at this hourly candle on a more in-depth basis, let's go back and look. Wait, oh snap. I'm kind of stupid. Hold on. Give me a sec. Hopefully you guys are gaining from this video. Hopefully you're enjoying it. I think it's so interesting to look back at like a price history, you know? Like I'm such a nerd when it comes to this stuff. I love looking at stuff like this. Let's see. So that was December 3rd. Go to the minute chart, zoom out. Go find December 3rd if we can. Oh, come on, TradingView. I know you can show me more than that. Let's just go look at the 5 minute. That's only like a few days. My internet crapping right now? I think my internet might be crapping. Okay. All right, boom. So this was probably an open. I had to guess, like we opened. Oh. See? Oh man, this was a big sell-off day. Holy cow. Oh yeah, look at this day. Woo! Spicy meatball, dude. You went down. I kind of remember this day. I think I was out and about whenever this happened. Or as they would say in Canada, Esther would say, oot in a boot. Am I right, Esther? Boom. And then you bounce back up here. Where'd you close? You closed here. Oh, you closed here. Wow. What a day. So yeah, so this was your close. And then I kind of forget what the point of this was, but you can see this hourly candle. Boom. Oh yeah, it was the support and resistance, right? So you can see here that we found, oh, I guess we don't need that anymore. We found support here at this very key level. Boom, we bounced up. And then I think I just saw in post market that we've had a couple green candles here. Obviously post and pre-market, you can't get too excited about what's going on in those, even though they are relevant to the chart. It's, it's still kind of the volume is so low. To me, that's, people say AMC is manipulated. Pre and post market is the most manipulated, like definitely, because there's no volume and they're just controlling the price. So whoever is trading that, right? So yeah, what you have here, guys, is this is that key support region, right? That we eventually established, and it's based off of that the crazy Fibonacci that I drew earlier, right? Let's just draw it one more time. It was from here down to here. I know I can extend the lines in the settings, but I don't like it to be pre-extended. It's kind of annoying. Yeah, so boom. See, my lines are literally just sitting. Hold on. Wait a minute. Did I measure it wrong? I'm such a bot, dude. So useless. Dave, what a useless guy, you know? What's he here for? Okay. It's not it. Oh, oh yeah. No, it's the support that was drawn whenever you bounced underneath the 200% Fibonacci. That's what it is. Sorry. So you slipped underneath that 200%, and whenever you did that, you created this support region on this double bottom before you ran up to $52. Then you slipped underneath here, and then you can also see here that this was like a traded range here before the run up to 72. So now you're sitting right in this range that was created through that support and resistance. And if you use Fibonacci, by the way, if you use Fibonacci, I guarantee you that you can find relevant support and resistance that within that Fibonacci that supports lines as well. But I'm not going to sit here and bother with it. Let's look at the patterns that we drew up from yesterday, and then we'll send you on your way like I'm a school teacher and I have the ability to do that, right? So so you have, remember, this micro falling wedge that we were looking at. You briefly broke out of it on yesterday. You had this definitely on the hourly. I remember actually I tweeted this. I said, if we don't see a big close to this 5-minute candle that we were in at that point, you're going to look like you're rolling over. I can find that tweet if you guys want to, but it was right around this time. You know, it would have been like 12:30 Central, probably for me. That how I have my sessions, yeah. So anyway, then you reverse down. What you would have hoped for is that you would have found support back on this wedge, and perhaps there's a way that you could draw this resistance line that would say that you're still being supported by it. So maybe you would say this was a false breakout. You came back down, you got rejected again, boom, and then now you're coming back and retesting. And I mean, you could make the case for that, definitely. If you go to higher time frames, that's why like trend lines don't have to be so uber specific, because these algorithms are considering just the candle bodies, right? Like, but they are also considering the wicks in certain situations. So they're trading based on multiple things, and that's kind of how they can always beat retail, right? And that's why like patience pays in trading when you're an individual trader, because these algorithms are very advanced and they know how to play with your emotions. But I mean, you could make a pretty compelling case that you're actually coming here to retest this falling wedge right now. In that case, this could be a bullish retest if you swing back around and you get volume. I think I saw somebody tweet that today was the lowest volume day for AMC all year. Somebody confirmed that in the comments for me. I'm not going to go look it up in the middle of the video, but that if that is the case, you have a very good chance of, like what Rico has been saying in his videos, of really coming out of the gates hot going into the new year. I mean, this daily candle, not the best daily candle, right? But from a volume perspective, yeah, no, this was not the lowest volume day because you had a lower volume day on November 24th. Now, this was a bullish fight back on November 24th, where you had a lot of selling pressure. Bulls kind of weakly tried to fight back, and that's why the price got sent down in this manner. Bulls were on the sidelines today, okay? No bullish institution was stepping in on today specifically to hold any price level. They absolutely just let the price go down, which is good. You want to see, you don't want to have low volume on a day like this where bears make a push and then the price comes back up, because what that's signaling is, yeah, bulls came in, but they weren't very enthusiastic, okay? Oh yeah, bulls came in to defend the line, but bears stepped out. They said, "Okay, yeah, give us your best shot," right? And they didn't. The bulls didn't care to protect the line here. Here, like the bulls bought up, and then they didn't come through. If they would have come through and maybe made a bullish engulfing, come to this 41, but they didn't, right? They only closed to like $39, which at that point was just a signal like, oh, yeah, we got to go lower. And that was on a distribution as well. Let's look at the shorter time frame and see if we look like a distribution or accumulation. Just curious. I know we're trying to look at the falling wedge. Yeah, I mean, you can't make the case for accumulation yet. We could possibly make the case that you saw a selling climax towards the end of the day. Here, you see how the volume really picked up? Boom. Right? Suddenly you get these big old volume candles. You could make the case that you perhaps have seen a selling climax. When you look at the minute chart in this manner, let's draw the line accurately using the minute chart now. And again, you don't need to use the absolute wick, okay? But we'll just do it based on this. So yeah, on the minute chart, you slipped underneath here. But you could be in a situation where this is a shorter time frame bear trap, right? So let's look at the larger wedge that we were looking at before. Go to a higher time frame. We'll go to the 4-hour for now. So this was a larger falling wedge that we had. I think I drew it based on no wicks. I probably drew it on the daily if I had to guess. And remember, these algorithms are advanced, man. They consider everything. They consider humans can't trade at the level that these algorithms. Okay. But you can see, boom, support, 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 right? So this is a valid downtrend support line. And then you have resistance, resistance, support, support, a bull trap here. You get sent down off of this trend line. You come back to retest it, you get sent down again. Oh, I mean, you have a lot of touch points on this downtrend. So there's no way that that's not valid in my mind. You have like 5 touches. This is a valid downtrend, okay? You've come and retested it over and over again. So what I think you have is a more macro falling wedge. Now, before anybody starts freaking out or whatever, calling me a shill, whatever, and saying, "Oh, why are you drawing the lines down that far?" I just like to extend the wedges to get a better idea of, where is that support and resistance on the long term, right? So I'm not necessarily saying that you have to come all the way down to the end of this falling wedge. As a matter of fact, I think that you have a pretty good case that if you can complete this retest, see, you had a bear trap below this one, then you found it as support a few times. If you can get a retest on the top of this yellow falling wedge, a more micro one, you have a strong case to say, okay, look, we've gotten enough touches on the bottom of this thing. Let's extend this line back to the left and just see. I'm pretty sure it doesn't touch again. We'll just make sure. Yeah. You have enough touches here on the bottom. You came up and you're in this more micro falling wedge within it. If you can get sent up off of here with some good volume, you do have a case of like, okay, yeah, we've completed this falling wedge, this more macro falling wedge look, right? And I know that a lot of people were drawing it as like a bull flag, kind of like in this manner. I don't. For me, AMC just hates bull flags. Like I just don't. I see the flags and the pennants get drawn all the time, and it's just like it just seems like they fail over and over again to both sides. Like I just don't see it happening as much. So let's just go in wedges. I mean, it absolutely just eats wedges alive. It literally respects every wedge. I don't know what that has. I don't know why it's that way, but it just is. So let's look at our ascending triangle we were talking about. See here, you do have a breakdown of the ascending triangle. And this ascending triangle I had measured on shorter time frames here. So remember, shorter time frames, it's less relevant. Whatever patterns you're drawing, it is technically less relevant on shorter time frames, but it is good to like look at in smaller context and say, okay, like maybe we can see a potential reversal at this point. I think that the wedge I drew on slightly higher time frames based on wicks, perhaps. Again, if you're enjoying this video, if you're gaining anything from it, make sure you drop a like. Oh man, this is in depth. We're 28 minutes in. Sorry. But yeah, so this was. Oh yeah, you know what it was? I drew it based on the silly repetitive pattern on the 5-minute chart. That's what it was. Whenever the algo broke and it just did the same exact thing 3 days in a row. Yeah, so you definitely have a breakdown out of this. This is definitely a bull trap. You had a bear trap, a bull trap, and then now you have a breakdown. So bulls will have to come back in, and they can, by the way. Like this isn't a convincing break to me. Like you're not saying you're not invalidating this ascending triangle yet. And I know, like I messaged this to Jen Collado. I said, look, I see a shorter term ascending triangle. Remember, it's based on this. All right, this is the ascending triangle. The only reason I have it extended back is just to see where more relevant support and resistance might have been found on this line. But this is the ascending triangle, and I think that you're still in play here. Let's see if we have an uptrend here. Yeah, you have a slight uptrend here, obviously. You could have said, hey, look, if this does end up being the bottom, you're just maybe you're in a larger ascending triangle, sorry. And then this is a resistance point, so it's key. You can see that there was a brief breakdown. Like here, it tried to find it as support, got sent down as resistance. So perhaps this is your ascending triangle. So yeah, I think that this is still on the table for sure. I'll add this trend line, this, delete this. And then we have our inverse head and shoulders, right? This was a micro inverse head and shoulders that I was drawing. This is still definitely in play. I know people like to use the head and shoulders like little tool. I just prefer, like, whenever I draw these, I like to just have curves. Like, so I just like to represent the head and the shoulders in this way. Or you can just put a upside down head and shoulders bottle. I think you're in good shape here. This this is definitely still valid to me. Especially if you were to go to higher time frames, you're definitely not saying this is not a valid head and shoulder. You haven't broken anything significant here. If you came down, let's see, you came down further and oh, what just happened there? If you came down further in this manner, right? If you came back down to like 2450, it's not, to me, it wouldn't be a head and shoulders anymore. I guess some people would start drawing lines saying, let's see. And by the way, all patterns are basically derived from Wyckoff, in my opinion. People would start to say, okay, well, it's like a slanted inverse head and shoulders, and what that would look like is more. I don't know. I don't. And yeah, I just don't. I guess you could say that. I just don't like that as much as if hold here. I think you got to hold. What is this? You got to hold $25 for this to remain a valid head and shoulders. And I mean, it can get drawn out in this way. Like, I don't mind that, right? It's the symmetry is good. Like, you prefer to have that symmetry. But this is nice. You get this low is lower than this low, and you already kind of have that slanted inverse head and shoulders, right? So you kind of want to break up from here, in my opinion, if you want to call this a head and shoulders. Let me just draw one more resistance trend here and see. Yeah, I mean, you could, I don't know. Yeah, you don't want to go below 2460. 2485 really. Yeah, so $25. You don't want to go below $25 in my opinion. Oops. Save this all together. But he doesn't even know how to use the program. He's a shill. You just put him here. And then again, we were talking about that being within a larger macro head and shoulders, right? I can just turn all these things on. Not confused. Let me change the colors. This one. Less stuff. Change this path to like blue. So I mean, to me, and I'll change this to bright green. A little bit too much. Me, you have a strong case here, guys. Like, you do. You have a strong case for reversal, in my opinion. I think that I don't know why this must be out of whack, because and look, this can take a little bit more time, right? I'm not saying that don't focus on the timelines, but you have a good case for reversal here, in my opinion. To say that we have cemented a bottom here at $20.94, which is what I've been saying for a while now. That my conviction was that we were going to hold this, $25, $26 level. This was before we really started to look like this head and shoulders and all that stuff. But I really wanted to see us hold above this 618, right? The 24.72 to $24.39. And then from a Wyckoff perspective, what that does is it makes it start to look like this was a terminal shakeout, which obviously I'm sure a lot of you guys have heard people say. This high volume break of the larger trading range, right? So the trading range that we've always drawn for the long term Wyckoff pattern, right? Accumulation. You had your selling climax. Oh, let's go to a higher time. Bro. Oh. Damn, I'm so good at this, guys. Wow. Okay, so your longer term support zone and your longer term resistance zone here, right? And this is just purely Wyckoff. We're not gonna look at it from Fibonacci or anything like that. We're just gonna simply look at it as an accumulation, right? That piece of paper, okay, that runs the world, the one that we always refer to. So let's look at this. We'll close, and then we'll close with OBV. That'll be our last thing, and then you guys are gonna go enjoy your new year. You gotta be a nerd to be watching this video. You should be out partying. But what does that say about me? If I'm sitting here making it. So this is your sell climax and your automatic rally. You say sell test in phase B. This is your phase B distribution. Right, you come back. Basically, it's like a sell test on the upside. You're testing the top of the trading range. You come here. These are LPSs within phase B. We'll chart the vertical lines as well for the phases, so we can be super fancy with it. And then, in my opinion, this is your phase C, spring / terminal shakeout. Right? Then you come back, you're testing here. This is probably your test. And then now you're getting sent back up. You've gotten rejected a bunch off of the zone. I mean, you can just see, right? We tried to break into this region. We got sent down. And I mean, absolutely just testing. 1, 2, 1, 2. Just to see what level here that we're seeing, right? Now, I said yesterday in my video that this candle the daily candle to me looks like we had to get sent down. We had to get reverted back, right? I didn't expect us to sell off and then not come back up to max pain, but Composite Man works in mysterious ways. I don't see this as a last point of support just yet. The way that we would say it's a last point of support so far is because we would say that this is a micro accumulation, okay? And so within the context of this larger accumulation, I know I said I was going to end the video, but I also said that I'm a nerd and I like to nerd out over this stuff. So deal with it. Just kidding. So this is the more localized trading range that we established. Okay. Similar here. And you had your sell climax. And this is why that meme, I feel like people don't really understand what I meant when I said the spring within the spring or whatever. But what was happening whenever that happened, right? And because I called for it like here, I think that this was the original spring within the spring video. But what this ended up being, in my opinion, is a sell test in phase B. Okay. And we'll do this. This was a phase B distribution. Okay. And then within this trading range, this behaved as a spring / well, it's pretty much the same thing, right? It's a spring. This is the ultimate spring / terminal shakeout. This is the case. If you're a bull and you say the bottom is in, the case that you're making is this was a spring / terminal shakeout in Wyckoff context, okay? You're saying that this was a spring / terminal shakeout. Let's go to an even lower time frame so we can see things a little bit more clearly. Okay? You came out of this region, you tested your way up, boom. And by the way, this is even a more microscopic accumulation that occurred here, okay? But we're not going to focus on that too much. And I mean, man, I don't know. When I look at it in this context, this looks like what Esther would be saying is then this becomes your sell test in phase B in reality. So that's a thing you have to look out for. And that this is actually just distribution phase B. You could have one more shakeout. And we've talked about that a bunch of times. That's like my secondary scenario. I think that the case that you're making here, and I hope that I'm not jumping around too much here at the end of the video, because I don't want people to go into the new year stressed or blah blah blah. But I just like to talk about the multiple possibilities. What you're hoping is that this was behaving as a shorter term even shorter term, okay? Accumulation right here, right? And just look up Wyckoff accumulation if you're like new and you're not familiar with that or whatever. This is like a phase B distribution, and that then you had like this last point of support, came back, rechecked this region. Really, you would come here, you tested this zone, you came here, tested this zone, and then you had your sign of strength. Okay. And so then, sorry, I know that I'm bouncing around. Hopefully you're keeping track. Then this was your ultimate sign of strength above this trading range. And then what you're doing is you're having a backup LPS phase. And I've had people send me here saying that this is actually a distribution. I've seen that on Twitter. I've seen people send that. And I'm not going to sit here and say that it's not, because this is a distribution right here for sure. I think that you went into another accumulation right here. The volume is favoring bears, okay? And this most recent push up and down, the volume is definitely favoring bears. But you could see a reversion. The volume has been relatively low, like we talked about earlier. It's been relatively low in that most recent potential accumulation range. So you're a bull. You're hoping that you continue this sort of general uptrend. You consider all of those patterns that we talked about before. You continue that general uptrend, and then you eventually get a sign of strength where you are going above this trading range like this with volume. You need volume on all of those patterns that I drew. None of them matter. Nothing in this video matters if you don't get volume on this. And look, man, bulls sent a pretty strong signal here. Okay, boom. You closed with I think the highest volume 5-minute candle day. Yep, highest minute volume candle, 5-minute volume candle on the day. Oh snap, not anymore. Was a green one. Okay, so bulls came in right at the end of the day, gobbled up some shares. So I'd imagine that you see somewhat of a bounce. We talked about the Fibonacci's, right? The near zone Fibonacci's. I'm definitely gonna have to do chapters in this video because fuck am I bouncing around. But go check out the Fibonacci section of the video. You found a bounce here at 382. You made a higher low if you can hold this as support, and you should see a general uptrend. So overall, my thesis is we are bullish going into next month. Again, and you guys have been in the play for long enough. You've been following the channel long enough. You have to be prepared for any scenario, okay? And so maybe I should make separate videos where I talk about all of the potential scenarios here in the near term. I'm going to do that, and then I'm going to start kind of just sharing those and saying, hey, this is what we're looking for in the general near term. Point you back to that video where I break down that idea and I refer to it. But yeah, you want this to be a backup LPS. You're finding support here, and then you're getting sent back up in the short term. Yep. Yeah. Yep. Backup LPS, and then you're getting an SOS on this larger, the red one. You get a SOS above here. You break out of your falling wedges. You break out of your head and shoulders. You get sent up. You got to see that volume. I say here that what's good is the price has been generally pretty downtrendy, and the volume has been downtrendy. My computer is lagging because the video is getting too long. Let's delete all of this. I'm not worried about it. We'll draw it again some other time. We'll check our OBV right quick, and then for real, the video is going to end. I'm closing out the year with a bang. A classic Dave 45-minute marathon. I wish I had that thing that Rico has where I can change my voice, because that sounded like it should have had like an echo on it. Marathon. Like I'm a ring announcer. Look at this, man. Like, OBV is so strong, dude. So strong in the 4-hour. Holy Nikes, dude. Let's see. Where do you... Yeah, I mean, you just have this intense uptrend. You're coming back. You're retesting these regions within the OBV. as price has been absolutely tanking over the course of the past 6 months or so. OBV is just climbing the ladder. You're retesting what could be an ascending triangle on OBV. You see a breakout of OBV in this manner, and you get excited. You can see that push coming in the near term, but overall, and look, they can want to accumulate more, but I think overall this OBV uptrend is just going to continue to climb and climb and climb, and that is so bullish, man. It's so bullish. As long as that doesn't change, I'm going to remain very bullish. I'm going to accumulate with the smart money. That's going to be my mission. That's what I'm going to do personally. You do whatever you want to do. Obviously, do what's right for you and your family, man. If you got to sell, you got to sell. That's it. Don't let anybody on Twitter or social media tell you anything different. You got to do what's right for you and your family. But me personally, I just can't deny the OBV trend. It is the most undeniable factor within this play. And does that mean that we're just going to the moon tomorrow? No. But I am confident that even if we continue to trade in this OBV range here, we just duck our head out every once in a while, eventually you're going to get this breakout here. I think that institutions are absolutely just buying this thing up. And I'll say it again. I think they're buying it up because they know that they can sell the narrative of this stock to retail at much higher prices. And they want to get cheap shares. That's what they want to do, man. I talked about OBV in pretty good detail in my last video, so go check that out. Want to know more about it? But yeah, man, like this is it. Like, it's not it. This is it. Clickbait me. No, this isn't it, right? But what I'm saying is you're coming to a point where reversal is a greater possibility. You got to do a few things. You got to get your volume coming in, right? And I don't think that retail is in control of that. I think it's institutions, right? But we need to be watching for the institutional signals so that we're more prepared for the swing up when it does come. And then what happens after that is what's going to happen after that, right? We protect ourselves against risk if you're in options and stuff like that. What I'm doing personally is I'm using Fibonacci extensions to determine where I want to get out of options at a reasonable point to protect myself against risk. And to be honest with you, I'm buying more shares with my profits because I do believe in the play long term. Now, does that mean that I'm buying shares with 100% of my profits? No, that's not. I don't just profit roll 100% of anything that I do. That's just not, to me, not very smart. I think that you should have, in my opinion, what I like to do is have a blend of options and shares in anything that I do. The options being a smaller portion of a play, unless I'm very, very like crazy convicted in the short term. But even then, like, I still prefer to have shares. Not financial advice. You do whatever you want to do. But you know, options are obviously just so much more risky than shares are. You can just hold shares forever, right? So overall, we're at the end of the video here. We're at the end of the year. This is my last video of 2021, most likely. And I just want to say thank you to everybody, you know, especially you guys who have stuck around to the end of this video in particular, because I know you guys are the people who have supported me for the longest time. And I just want to let you guys know that it means a lot to me, you know. What I do is incredibly, like, in real life, it's incredibly weird, I suppose, as I just sit here and obsess over charts. And I found a community of people who, even within this community in AMC, where a strong part of the narrative is like, no dates, no charts, no price targets, no this, no that. Everybody just buy, hold, close your eyes, whatever, and eventually it'll happen or whatever. I feel like we as a community have brought a side to this play that wasn't here before, and that's what I set out to do. When I started posting on Twitter about AMC in July, the reason that I started posting was because I was aggravated on behalf of a lot of people that I think would exist in this community, which are people who are like me, you know, people who are analytical and want to understand the price action in their investment on a day-to-day basis. Like, that's just who I am, you know? I really am. That's what I do, you know? And instead, what was going on in the YouTube space and the Twitter space for this play, and I was on Twitter for a little while before YouTube, but what I found was, you know, just this rah-rah, hype you up, buy and hold no matter what. Don't worry about it. Buy and hold. And I, to be honest with you, in July, was seeing a downtrend on the cards. And I just didn't know if it was dishonest or what it was, but I thought that there would be somebody like me that, you know, because this is why I learned technical analysis in the first place. I was a fundamental investor from 2011 to like 2016, 2017. Really, 2017 is when I stopped. I bought Bitcoin on complete fundamentals. I rode that wave, took profits, everything like that. But throughout that price cycle where it peaked in December of 2017, I started to take on technical analysis because honestly, I had too much money in the play. And even though I was experiencing incredible gains, it was stressing me out because I was too deeply invested in it. And that stress caused me to go and learn technical analysis. That's why I started teaching myself technical analysis at that point. Because at a certain point, fundamentals don't serve you when you get into this parabolic rally in such a short period of time, which had never happened to me before. So I started to learn technical analysis because everything that was going on YouTube or Twitter or whatever, whenever I went to learn about it, for the most part, was just like, yeah, like we're going to $50,000 of Bitcoin or whatever, and it's just this rah-rah cheerleader stuff. And that's what I was seeing in AMC too. And that's no shade on anybody who's here already. I actually think that there's a lot of value in what that part of the community brings. But I'm saying all this to say I started making content for you, the person who is sitting here and actually gets something out of technical analysis, and understanding the price action of your investment on a day-to-day basis. It doesn't mean that you're taking action on that, right? It just means that you want to understand. You want to understand what institutions are looking at, what institutions are doing. What is the psychology behind the moves? What are people trying to make you think, so that then you can at least have some context? And does that mean that what we're doing is perfect here? Absolutely not, right? We're not 100% accurate. Like I'll never claim to be 100% accurate. What we do is we break down potential technical scenarios that we see that could be coming to fruition, but nothing is guaranteed. Nothing is guaranteed, man. Like at the end of the day, everybody is here to make money. Making money is not easy for a reason. It's because it is a battle, right? And everybody is in a fight against each other. There are bulls or bears, right? There are sellers and buyers. And for you to just tell a giant community of millions of people to just close their eyes and hold on to their investment no matter what, right? When they could have bought, it's completely possible, right? Completely possible that they bought right here at the end of this wick, $65. And at one point they were down 67%, 68%, okay? In my opinion, some people can do that, okay? Some people can do that, no doubt. And that might be for some people, but I will tell you that there are a bunch of people that it's not for, right? If you were the guy who bought at $72 and you're down you were down over 70%, at this point you're down 62%, and that's if you didn't buy any options or something to try and emotionally make up for whatever and then have those expire worthless or whatever. It's not just buying and holding is not for everyone. And I understand a lot of people are still deeply in profit from before the June rally or even before the January rally. I understand that. But that is not everybody. And I think that what we've done is we've created our own community within the community of people who want to learn in that way. And I'm proud of that. I'm very proud of that. I'm proud of the community that we've been able to cut out, help the people that want the help. And if you don't want to look at charts and technical analysis, that's totally fine too. It's totally your thing. Like, that is fine. Just like it's for somebody to look at charts. I need to look at charts. It's just a way that I like to follow my investment. So with that rant out of the way, again, I just want to say thank you guys so much. The people who support me, thank you guys so much for sharing the content, liking all the videos, commenting on all the videos, and letting me know what's going on. Thank you so much for the people in Discord. Esther Nayphil, Lamp, thank you so much for all the support you've given me when it comes to Discord. Like, you've helped me out so much, man. I appreciate you so much. Dazed, every day, Dazed is in there grinding out, doing charts. You got guys like Square Root of 9, Trey, Rico. Man, you guys are sick, dude. And no matter what happens at the end of this, I hope that a lot of people within this community have gained something from what we have done, what we did together, which is create a more powerful retail. That's what I think that the ape movement should be standing for, what it should be fighting for. And there are many ways to accomplish that. And I believe that education and technical analysis is one of those ways. And I know that I'm repeating myself probably, or I'm ranting too much, or maybe I'm being emotional or whatever, but I just want to let you guys know that I appreciate you guys. And I probably spend way too much time on this stuff. But to end the year and going into next year and on to whatever the next step of this journey is, it's just amazing to me what we've been able to do. I mean, look at the dude. Like, whenever I got into this play, dude, there was nobody covering technical analysis, nobody covering Wyckoff, like technical analysis really at all, other than just like having charts up, or like cycle theory was a big thing. Shout out to Astra, man. Astra has platformed me so much, dude. I appreciate that guy so much, man. And I think he's a sicko for sure, but he's on to something, and I think that he grinds harder than almost anybody in the community. Thank you so much, dude, for everything you've done, and everything you've done for the movement. Absolutely is so meaningful to me. But like, we brought that real raw technical analysis, and we were following the Elliott wave theory for this, right? Remember? And we were doing just basic technical patterns and teaching people. And you guys remember, obviously, this is like when the YouTube channel started. We had this falling wedge that we were charting here, right? Boom, we got that big bounce out of there. I remember this day, man. It was crazy. I think this was the day that we stepped away from the computer, right? I was streaming this day, and I'll never forget. I had the chart all zoomed in on the minute chart and stuff. I went to use the bathroom. I went to take a poop, and we came down here, boom, and we bounced right out of this. It was the 786 Fibonacci. Look, I'll show you. I think it was off of this wick, if I'm mistaken. I think I'm on log scale. See, this is a good example of like the log scale. You don't always have to use log scale. Boom, we came off of this 786, and literally the minute chart was just running off of the screen. And I came back and I was like, whoa! Because we were calling for that move. And I mean, we weren't calling for it that explosively, but we were calling for it. We broke out. We did all this, and then we really started to focus on the Wyckoff theory, because it was something that was brought to my attention in May whenever Bitcoin was doing its dump. I saw it on another YouTube channel. I can't remember the name of the channel, but it introduced me to it, and I was following it on Bitcoin, and then I started to notice that this was looking like an accumulation pattern, just like what Bitcoin was going through, and I was like, holy shit, man, what the hell? So then, we started to follow the Wyckoff theory, and dude, like, even though like we didn't predict the bottom or whatever, like we were wrong on the uptrend beginning and stuff like that, and we ended up getting what I think here is a spring/terminal shakeout instead of that phase C LPS, which I'm sure a lot of you guys remember us charting. um, you know, the impact in us bringing Composite Man to the surface, right? Bringing Wyckoff theory to this movement, I think that a lot of people at least have a greater perspective on what the market actually is as a result of what we brought to the table. And I'm not taking pure credit for it. I'm just saying that, you know, that fight that me and you, the community, went on, and us being able to inspire that thought process. I mean, Trey's trades, which is crazy to me. Trey's trades himself has since been making references to Wyckoff theory in his videos, and I know um, that it's you know, I'm not saying that like he's stealing or anything. Like that's not what I'm saying. But what I'm saying is I had a couple conversations with him, and it opened his eyes to it. And you know, when he made one video where he briefly refers to Composite Man that I saw, and he refers to how this was potentially a spring in a way, but he's not as educated on it. Well, like that was enough for me. Like I was like, man, this is so cool, dude. Like we've made an impact on this movement. We did it, you know. And it's not over yet, but I think that there are brighter days in the future for this play. And if I didn't think that that was the case, to be honest with you, I wouldn't be in it. But I do believe in the play. And look, I know that this video is like an hour now, but look, it's the year close video. It's the Dave, the Megala Dave. Okay, that's what we're gonna call this one. And I just wanted to close with just some of my thoughts, some emotion, just connecting with you guys. But again, if you like the video, make sure you drop a like on it. Comment your thoughts down below. If you learned anything throughout this process from me or someone I connected you to in any way, drop a comment below talking about that. I would love to see some of the things that maybe some of you guys have gained. Maybe it's Fibonacci, Elliott wave, patterns, Wyckoff theory, anything like that. If you found Rico's crazy ass for me, make sure you check that out. I mean, not check that out, comment that down below. I'm such a YouTuber. I have these like phrases that are just imprinted on my brain now. But yeah, man, like, thank you guys so much. Thank you guys so much. Check out the Discord down below. Go follow me on Twitter if you haven't already. We're going to keep grinding. We're going to keep doing our thing here. I'm not going to lie. I was down and out a little bit for a while there. Just on... the negativity was just getting to me a little bit. You know, it was a little bit more. But overall, I just wanted to spend some time and like I've been thinking about like, you know, the things that I'm thankful for, you know, and I just wanted to say that I'm thankful for you guys. I'm thankful for the people who supported me up until this point, and hopefully we can do some great things in the future together. And with that, I'm gonna stop being a sappy little bee. Hopefully you enjoyed the Megala Dave. I did not plan on this video being an hour long. I thought that it was going to be 20-30 minutes like all the other ones, but here we are. Hopefully you enjoyed, and until next year, take it easy.